everyone. I'm still working on the intro. We're gonna slowly but surely get this going. But anyway, good evening, everyone. It's Options Monday. Today is Monday, May 19th, 2014. As you can probably tell, I've got a little bit of a bug I'm dealing with, so feeling a little bit under the weather. So tonight's show might be a little bit shorter than usual. As always, my name is Brian Beamish, the Canadian Rational Investor. This is my website that I host, therationalinvestor.ca, and today is Options Monday. I've noticed over the past few weeks that participation in a lot of these chat communities has waned quite a bit. So I don't know whether my co-host Joe is going to turn up tonight. And as I said, I'm feeling a little under the weather, so we may not go the full 2 hours. It might just be a short presentation tonight. But I thought for those people that are interested and that do follow, it would be a good thing just to make sure that I am here. So I do see that there are people asking for the YouTube and Google Hangout address, so let's pop on over and just take care of them while I've got here. What do we got here? What's focused on Options Monday? Option setups. Yes. Yes, indeed. I think what we'll probably do tonight, like I said, not feeling overly robust. So I think we might just do just a brief overview of what I see happening with the markets, which is a weekly commodity trend summary, review any new or existing option trades that we got working there. And then maybe just a quick overview of the WDB and then call it a night. So I do notice too that Bitcoin itself has quieted down quite a bit lately. Here's a chart going back into the 14th, and you can see volatility has come right out of this thing. And so as a result, we have this trading community here at TradingView, which under normal circumstances would be quite active, but right now it's very quiet because, like I said, the Bitcoin's quiet as well. So, as always with these markets, I like to start with my weekly commodity trend survey, which just basically gives us a nice overview of what the current trends are in the market. You can find that by going to the trading forum under therationalinvestor.ca. Every week it's updated. I didn't do a new commentary this past week, but I did update all the trends. So, we just take a quick boo. We can see in currency land, US dollar index right now, still generally heading down. Made a new low last week, so broke through key support. So that trend is continuing, as we say here. For 35 weeks, the US dollar index has been trending lower with some reasonable technical targets. Was interested to see Canadian dollar actually perked up quite a bit here. Got a little bit of a double bottom working. You can see that the momentum indicators on this chart here are turning. Moving averages are trying to turn. So, just simple WD GAN stuff, 50% rule. Right now we're showing that the 50% rule in the Canadian dollar is 96.125. So that would put a rally up in this neighborhood here. Looked at the options, not quite attractive enough to take a gamble on, but nonetheless, interesting chart there. British pound continues moving higher. Euro, it is still pointing higher, but the stop was recently hit, and so was the Swiss franc. So a little bit of weakness here on the euro currency. You can see this stop here should have been taken out. Momentum looks like it's tipping over, so not quite ready to declare a short. Looks like if we close below this level here, 136.69, we might start to get some action. We got 136.45, so that's what tripped up the stop probably. Where are we? Euro. Yeah, 136.69. Swiss franc, same sort of thing. Wow, you can see nice well-defined double top here. So we start moving down below through this level. What's that? 111.79. That'll be technically pretty bearish. Momentum indicators looking pretty nasty too. Again, from an options perspective, probably not enough money for us to make money to take a look at the options. Probably a good idea since we're looking at the weekly commodity trend survey. Let's pull up. And you're more than welcome to take a look at any of this information at your leisure. All of these are open links. So let's see, we have here, we go here. Show summaries. No, that's not what I wanted. How do we go back? Probably the services. There we are. Weekly commodity trend survey. So you're more than welcome to take a look at this document. I'm going to be making a video of this fairly shortly so that you can watch the video. But for the purposes of this, let's just fire this into the notes field here. I guess we could do it right here. This is how you do it or not. No. How did I do that? There is the page, and there's my talking. Maybe it's right here. Oh, must be right here. There we go. All right, so we'll just put weekly commodity trend survey tutorial information. Slideshow presentation materials. Put that there. All right, so at least you have that now. All right, and we did get another bleep from over here. What do we got here? Somebody say something? It's funny when you hear these. Oh, who's this? So where is YouTube? Is this option? So where on YouTube is this option thingy? Oh. There you go, sir. If you feel like participating, you're more than welcome to join us. All right, so the point of the matter here is when I consider doing options trades on commodities, it's always important to have a nice model to work with, a nice framework. So you're more than welcome to head on over to this link, and this basically just describes what we do. So what is a weekly commodity trend survey and how does it work? Advantages of using long-term option strategies. Weekly commodity trend setups, the trend is your friend, and how to participate. So we just talked a little bit about what the model is and what the model is not. Why I like using options in particular, finite risk, unlimited earnings potential, and appropriate risk given the size of your portfolio. Basically, you can customize the amount of risk you're going to take based on your portfolio. The basic strategies used, double bottoms, double tops, tell us trend direction, and then 50% rule. I also use the bullish and bearish ABCD pattern, which I don't have on this right here, but basically this is in a nutshell how the service works and what it would take for you to participate in the service. So, all right, so moving back to our list, as we said, whoops, let's head up here. Most recent, so currencies. Some interesting new trends. Like I said, we've got the Canadian dollar trending higher, European currencies looking a little bit weaker, and really this is probably the trade du jour. This is my most recent trade setup for the weekly commodity trend survey, and actually I did a fairly robust write-up on TradingView. So here is this Japanese yen trade. Long and short of all this is the yen, when it topped out back in 2011, it was up at about 132. It spent the past couple of years working its way down, got as low as 94.85-ish. My hunch is we're probably going to have to revisit good old 38.2, which is right around 109. And if we get really lucky, we get a nice rally back up into the optimal trade entry area for those wishing to short. So this is the optimal trade short zone, which is the 61.8 to 78.6 fibs. And you can see there's some nice juicy gaps in here. And, this old low obviously is a significant mark for the market to keep an eye on. So recently here I went shopping in the options market, and it turns out we can buy the December 2014 110 call at 0.002 points. So let's see if that price is still the same. All right, December calls. All right, so the 110 call. Oh my, look at that. Is that for real? So the 110 call right now is 136 points. That sound about right? Did I do that right? Something doesn't seem right there. Time 98.85. Oh, it looks right. December 2014 calls. Wait, that's the 101. Here's a 110. All right, so I originally took a look at this and I was very interested. You can see at the 110 area, they were 0.002. So now those options at 0.0023, so they actually settled up a bit, but you can see that they actually came off a little bit here today. 0.00106. So in that area, anywhere that area, I'm very interested. I'm more than happy to accumulate those. This trade's just getting started, so I think we have lots of time here. I did hear somebody say something. What do we got here? Yeah. All right, so and this is the interesting part about this game, right? Is that when these trades get going, sometimes we might just have to sit here for a month. It's very possible. The capital spent. Basically, we're in the trade. We bought two at 0.002. You can see the 38.2 here, 0.0932. My argument is basically by sometime by December, we should see this market rally up and kiss this area. There's the 50% level, right? So that's good old Mr. Gann, simple 50% rule. And that's at 113. So put it all together for $500 risk. I think this is something really, really interesting to take a look at. And as you can see, those that are watching right now, I think we got one or two people. People will slowly come in over time. So we'll just take it one step at a time. So this is sort of our trade idea du jour. Very interested in this trade, and I think this is a more than respectable place to have $500 of your money working. Nice and simple. And keep in mind that we want to make sure that the amount of money that we're risking on any one trade doesn't represent more than 5% risk of our total portfolio. So if we're putting $500 to risk in this trade, then by definition our portfolio should be at least $10,000. So that's an important number to keep in mind, okay, folks? That gets back to good old... and again, this is information that's all basically open to the public right now. You're more than welcome to take a look at it. I wrote this course about 6-8 months ago called Introduction to How Capital Markets Work and Building an Investment Plan. And in my introduction to this course, I talk about how I worked in the securities business for about 20 years. And I came up with two very simple rules of investing. Number one, come up with an algorithmic approach to your investment decisions. That process from start to finish must produce desired results 66% of the time, or two-thirds, right? That's an important number to remember, two-thirds. When you pull the trigger, you must have total confidence in the statistical outcome of your plan. Now, rule number two, this is what I was talking about a moment ago. Never risk more than 5% of your stake on any one single investment idea. There are many different ways to manage that risk, but it never should breach that 5% level. So, in this scenario, we do our due diligence. We come up with realistic targets, and basically, if we're going to buy an option, if we're going to spend like $500 on an option, my hunch is you just buy the option and just let it ride to expiry and see what happens. I think by time expiry comes, we can get a nice rally on this. And, if we start to get less than, say, 2 months of life left on the option, I might consider either rolling it out to a later contract month or abandoning the trade. But just generally speaking, that would come in October-ish. So really, I'm in no hurry to do anything with this through the whole summer. All right. As you can tell by my nose, I'm a little stuffed up at the moment, and I'm just going to mute the microphone so I can blow my nose. I'll be right back. All right, that was fun. All right. Since it is pretty quiet here, and I am writing this show in the Google Hangouts by myself, you're more than welcome if you have a question to pop into the Google Hangouts and be a part of the broadcast if you'd like. I do see there are a few people on YouTube, so feel free if you want to. You can come into the Google Hangout. Because I'm doing this by myself, though, we do have a potential problem in that if my internet connection kicks out and I'm the only one in the Google Hangout, then what ends up happening is the call just gets dropped. So that is a risk. My co-host seems to have disappeared of late, so I'm not quite sure how we'll handle this, but we'll just take it one day at a time. So if the call does get dropped, I apologize. I'll try and reestablish, but that's a definite risk. All right, so we talked a little bit about what these weekly commodity trend survey setups look like. We've talked about, as we were making our way through the list, we were working on the currencies, and boom, out pops the Japanese yen. So, every week you're more than welcome to come to this website and you can see what they're updated. They're nice and simple. Basically, the Japanese yen is put in, like we said, we have one of these W's. If we're thinking about buying, we want to see W type action. And we want to see that the 50% rule is pretty far away from the current market price. So you can see here, if we look at the Japanese yen chart itself, where's the Japanese yen? If we zoom in on price action alone, you can see, and we have just a cute little W. We'll see if it develops into something more. But we came down, we went up, we came down, and then we went up. So there's your W. And your buy signal comes on a move through this high there, and so you can see that was done. So this trade is alive right at the moment. And what's interesting too is I'm playing around with the online Forex markets, and what I've done here is I don't know whether you guys can see this, so I'll make sure that now you can't. So let's pop over there. So this is a Metaphor LQ Trader MetaTrader 4 terminal, and basically we had, actually it's probably best to look at this chart. Here's the 4 hour. we can pull this out to daily or weekly to see that same formation. So keep in mind that this is the Forex market, so it looks exact opposite. But here you can see very well defined double bottom, double top, double bottom there. And this is on the weeklies. That's top, but you can see this massive monthly one here. So we got a counter trend rally, then we got a bit of a fail here, and so if I am long, and this is something you have to understand with the forex markets, if I am, let's pop them back over here. Okay, if I'm thinking long the futures markets, right? So I'm basically looking for futures prices to rise, then that means by definition, the Forex market has to look the exact opposite. And I know that's a bit confusing for new people to the market, but you just have to understand this is a futures contract. The futures contract is basically long Japanese yen versus US dollars. And the Forex market is the exact opposite. It's long US dollars versus Japanese yen. So just exact opposites. So if I'm looking for a rally in the futures markets, it means that I'm looking for a pullback or a move down in the Forex markets. And as you can see, where are we here? So this has come an awful long way. So if we were looking at this Forex wise, we can see here's our rally window here. Here's this OTE, the 61.8 to 78.6. And I'm looking for this market to work its way back down and test this ultimate bottoming range, that would be the topping range on the futures. And so what I've done in Forex land is I've gone ahead and started to establish a short position on the Forex cross. So I just started, these are tenths of a contract, so I just want to start building the position. So there was a double, and this was first thing this morning. There was a double top breakdown. This looked like a significant level, so I shorted a little bit here. This is also a significant area, so I shorted a little bit more here. Really, I suppose you could argue that this 101.60 area is probably some major resistance in that area. If we got another rally up into there, my hunch is again, these are 1/10 size, so I'm just sort of building the position. But I think probably not a bad idea if I could get a short on somewhere in that area. I'd probably add another contract, or a tenth of a contract there. But as you can see, this sort of dead cat bounce rally that happened through the trading day today, if you take a look at my candlesticks tutorial, you'll see that this action right here, let's see if I can put it on. And I'm sort of getting used to this this system. Somebody told me that this was a good place to do some trading, so I'm just sort of getting used to their platform. But if you can see this right here, this is an inside bar, this one bar right here. It's basically the exact opposite of engulfing pattern. Let's make sure that you can see that. Good. All right. So you can see this is an inside bar here. So you can see these dotted lines. This is where I started shorting, and actually I've got another sell signal by the inside bar here, the failure of the inside bar there. Actually, pretty much right where price is right at the moment here. This low is on Forex land is 101.448. So here we are, 101.45. So anywhere in that area is a fine location to short. But as I said, I've already got a couple on here, so I'm using the Forex market to start building this short position. I don't know exactly where the where the perfect top is. I'm sure it'll make itself well known when it comes in. And what I like about these guys here is you can just short fractions of contracts. So I sell a tenth of a contract, right? So every pip movement is like $1 as opposed to like $10 in the futures market. So me building this short position right now, I'm down $23, right? Big deal. And if the market moves higher, in fact, if I'm not mistaken, I think it was Joe who actually said it. Maybe it was one of the other show co-hosts said that they actually like it when it rallies because, if they're building a short position, they like to see it rally a bit more because then that means they can sell a little bit more and they can sell a little bit more. And I kind of like that idea too. So long and short of all this is there are multiple ways to play this. This is a weekly trade setup, so it's not a day trade kind of idea, and that's sort of described in this, what this model is versus what this model isn't. So, it stands for Weekly Commodity Trend Survey. So, I'm not looking for markets to move over the next day or two. Really, I'm looking at to try and get in on the trends on the weekly basis. So. All right, so that basically describes this Japanese yen trade. Let's move right along. Interesting to see Aussie dollar and the Canadian dollar were relatively weak of late, implying international weakness in commodity demand. Let's make sure you're looking at the right screen. I have to keep reminding myself to jump back to different screens here. All right. All right, moving on to the interest rates. Short-term interest rates still moving higher. And it's funny when you listen to market prognosticators talk about interest rates and all that. It's really simple. This is a euro-dollar contract. So this is the corporate cost for borrowing money versus T-bills would be the government cost. And, there's no doubt about it. This is a rising, trending market. So, the way I look at this is interest rates, short-term interest rates are falling. They're not rising. So I wish people in the public would respect that. So, we're not in a crisis as it is. It's not a credit crisis right now. So short-term interest rates, the trend's still up. They've been long for 40 weeks now. Target's been hit. So basically it's all gravy now. A little bit different picture when we look at as we move out the yield curve. The 2 years, the 5 years, and the 10 years were all sort of threatening to break down. You can see, like I said, I got a cold, so here comes a sneeze. So I'm going to mute you just for a second. Be right back. All right, I think we made it. All right, so moving right along here. U.S. short-term paper, you can see that the trend is sort of rolling over here. So a bit of a divergence between the 2-year and the 90-day paper, which ironically enough is actually good for the economy because you want the yield curve to be widening. You don't want it to be narrow. And speaking of which, let's go quickly pull up that, the yield curve. See what it looks like. In fact, I think I have a link on the yield curve right here. Where is our yield curve link? There it is. All right, so this is as of May 19th. You can see short-term interest rates are basically zero. All right, hopefully everybody can see this. Good. And the curve you can see, so the distance between the very short end and the 2-year and the 5-year, you can see it's pretty steep. So market likes that. This is, believe it or not, this is actually a very healthy, normal yield curve. So bank profits, insurance company profits, reinsurance company profits, annuity, pension plans. They're all loving this. This is absolutely perfect environment for them to make profit. So I hate to say it, I don't see any stock market shock here. This is very nice and healthy. Nothing wrong with that at all. So as we said, a little bit of a bid in short-term interest rates, I guess is term. I don't know. The trend was definitely moving down, but you can see that we had a little bit of a rally back here, test lower, and then move up. So I think the weekly commodity trend survey's probably stopped out on the short. Let's see, where were we? Let's pop back over. Yeah, we'll go over here. Boosh. Boosh. All right. So, short. Well, the short's still working. That's good. So short from 109.8125 with your stop at 110.24. So we take a look at that. There's the 109. This is this massive double top, and your stop should be sitting just above that top. So we'll see how that goes, but that short is still working. I guess we can get rid of that for now. 5 years. This trend's been 24 weeks old, but these have been stopped. These stops have been hit. So that both the 5-year and the 10-year, let's see what they look like. All right, so we had the little counter trend rally there, so that triggered a stop there. And really, I think that was a profitable trade. Let's see how that worked. So you were short from 121.09, and your stop was 120. So you clipped it for about $1. That's not bad. I mean, considering how expensive futures contracts are and interest rates, that's actually a bit of money. So not bad. What's the multiplier here? Does it say? I think it's they're funny quotes, right? Because they're in 30 seconds. So a little bit of a funny. Do we have that? I wonder. Where's contract specs? Here we are. One half of 1/32nd. One half of 1/32nd of a point is $15.62.5. So that means 1/32nd is $31.20 some odd cents. So 31 times. So what did we say that was? 31 times 31. So 1 full point of profit on a futures contract is 31 times roughly 31. That's a better part of $1,000 in profit. So that's not a bad trade. Not a bad trade. Let's see, 10 years. They were short from 125.71, stopped at 125.07, so that's about 3/4 of a point, but still stopped out. And interesting to see, the long bond is actually pointing higher now. And you can see we have this inverted head and shoulders pattern. And I did a write-up on TradingView for that. Where are the bonds? Bonds. There we are. And what I see happening here, there's the inverted head and shoulders. Let's make sure that you guys can see this. Yep. Okay. So there's the inverted head and shoulders. There's the neckline. This would imply a target right up against this 61.8. And gee whiz, what a coincidence. There's the OTE short zone. Some nice juicy gaps. You see this is just a straight line down, so we could literally go straight line right back up. So juicy gaps right near this OTE level. I did look at the options and, the breakouts right here. So that means, basically 135 area. You'd have to risk all the way down to 127, which is just about equal distance to the target. So, from the options perspective, the option premiums are way too high for me to consider a weekly commodity trend survey setup. And the futures trade, it would just be a 1-to-1 risk, right? 1 point of risk versus 1 point of potential reward. So not enough for me to justify actually doing the trade. But nonetheless, it's important to understand what's happening in the yield curve. All right. So, and what that means is if we look at where did our yeah, if we look at this yield curve, this farther out end is going to curl down as the interest rates fall on the long end. And so that may change this healthy relationship. Whenever we start to see the yield curve start to invert and go bell shaped, that's a warning sign. So it hasn't happened yet, but you can see the action is in the charts. It definitely has a potential of developing that way. All right, moving right along, stock indexes. Like I have cautioned people, this is very, very dangerous market. The Dow's been trending higher for 90. And also notice too that all of the trailing stop levels have been hit. So a lot of these, and you can see really nice profits. I mean, and it wasn't like so you're long from 13,365. That's 1,400 points of profit. So that's a lot of money. Nasdaq, same thing, long from 27.91. Stop was, and you can see we exceeded the target. Stop was 34.22. So that's a nice 600, almost 20% profit. S&P 500, same thing. Long from 1450s. The target was 1534, so we blew past the target. The stop was ultimately hit 1760. So if we just pull up the S&Ps, what are we talking about here? Whenever the market starts making lower highs and lower lows, that's our warning sign. So, the breach of this significant low was probably where we got out, 1760.25 right there. And what did we say our stop was? 1760.25. So basically that happened there. So we were stopped out here about the middle of February. So just think of that. For the past 4 or 5 months, haven't been long the stock market. Yes, the market's been trending higher. All these are still up, 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 up. But lower highs, lower lows. That's my cue to get out. Right? Remember this diagram. If we start seeing this kind of action, the double tops, then basically that's our cue to hop off on the sidelines. All right, let's see where we are here. Interestingly enough, the only market that is not trending higher right now is the Japanese Nikkei. And what I find really interesting about that, of course, is that the Nikkei itself was the one that led this rally to begin with. So the fact that it's starting to make lower highs and lower lows should be a major warning sign to all these other markets. All the other equity index people around the world should be like, uh-oh, that's not good. Japan's starting to break down. And not only, it's not like it's their stop has been hit. This is an outright short. Like this is actually a short trade working now from 14,110. So where's that? 13,940, that's right there. So this, you see, we look in our course material, there's the double tops, the M top, and sure enough, on the Nikkei, and you can really see it rally market up, came back down, rallied up, tested that high, and then boom, broke down through the bottom. And really, if we do a nice 50% rule, that high there is 16,390. This low over here is 8,000 and change. So you can see this thing's got quite a room to come down. And sure enough, our 50% rule right here is sitting 12,330. So that's the target. Now, keep in mind, like I've said before, for us to actually consider doing the option trade itself, we have to realistically see a potential double on the trade. So where do I have that written up? I thought I had that written up. So if I can't go into the marketplace and buy an option where I think it's going to be double the purchase price at our target, then I'm not really interested in doing the trade. So I looked at the Nikkei options themselves, and I don't see the opportunity. The options were just too expensive. So yes, this market did give a signal, and those who are in the futures market, or even those that are along the stocks themselves, they should do something. That was a prompt to do something. As for the weekly commodity trend survey options plan, um, I just don't think that there's enough of a reward to actually take the trade. All right. As I said, I've got a nasty cold working here, so I'm gonna have to blow my nose again, and I don't want to blow my nose in your guys' ear, so I'm gonna have to put you on mute a second. Be right back. All right, that was fun. All right, where were we? Okay, so we've looked at the stock indexes. I think you hopefully will all have gotten my general feeling, general message that markets are getting a little bit nosebleedy up here. And if I'm not mistaken, the January barometer this year is suggesting that this fall is going to be pretty nasty. So really, it doesn't surprise me that they're setting themselves up like this. All right, moving over to the metals. Uh, sadly for the gold bugs, I just don't see a heck of a lot of new happening here. We pull up the gold chart, for example. You can see lower highs and lower lows. We have a new little bearish ABCD. I contemplated whether adding it to the trend, but I think I'm just going to say that look at the trend was down. It was down for 26 weeks. Basically, we're stopped at scratch. I mean, that's a difference of $15 or so. The initial target was hit on this short, so if you had two contracts, I would have highly, highly encouraged you to let one go at the target, and then you would have been stopped out on the remaining one at just a small loss. You look at silver. Silver was trending lower for 74 weeks, long, long time. Same sort of thing here. Our target there was about 18 and a half or so. Heard a lot of people talking about how $19 is a major line in the sand there. You look at this chart, I could argue that we get any kind of movement below these lows here. What's this low? 1893.5, 1906. So that's you hear the pundits talking about $19. But sort of anywhere in this area, if we start breaking down below there, then we're going to have new M tops. And so this low just 3 weeks ago was 1875. So technically speaking, we're actually still heading down here. And I suppose you could actually justify a short from a break of these lows here, right? What's that low? Ooh, hello, something just happened. It's funny how this Forex system just loves to spit up these funny little sounding things, but they don't mean anything. Anyway. So long and short of all this is I still think it sure looks to me like the gold and silver market are still trending down. I don't see any change there. It looks like, being conservative, we were stopped out at basically scratch on these recent shorts, but as I said, both silver and gold have new M top patterns working, so still not too much of a bull there. Copper's been acting a little bit on its own lately. They like to call copper the professor of economics. You can see how generally this has been making lower highs and lower lows. The fail through this low here, 3.0065, that came in here. We were trading down 2 and change, basically set up another M top. So your stop on this short here should be right up top here, 346.6. So we've said here on high-grade copper, trend is down 11 weeks. We had a tight stop here, 314.45. So that's this high right here was taken out. So we decided just to maybe hop off on the sidelines for the time being. So long and short of it there, no trade, trending lower, but basically just sitting on the sidelines. Platinum and palladium are funny little creatures. Of course, they're sort of considered the rare earth metal category, especially palladium. And a good portion of the world's supply of palladium comes out of Russia. So not a big surprise that we've seen palladium prices move higher substantially since this whole Ukraine crisis. What's that going to do to sanctions? Oh, excuse me. What's that going to do to sanctions? Is this metal going to become rarer? Nice, trending higher market. If you like to play geopolitical events out of Russia, palladium's fun for that. Interesting though to see though at the same time, see platinum. There's the copper. Platinum here is trying to bottom. So, unlike gold, unlike silver, platinum is trying desperately to turn the corner here. And I think it may again be sort of a play on Eastern Europe and Russia. They are, one of the biggest suppliers of platinum for the market. And there may be other. Pardon me. Keep in mind, guys, I am sick right now, so lots of sneezing, lots of coughing, lots of yawning. I'll probably go right to bed after this, but anyway. So, not enough for us to consider an options trade itself, but it'd be interesting if you like to play the rare earth stocks, platinum stocks, all those stocks. They might look really interesting in here. All right, crude, same sort of thing. Sadly, crude's just been doing nothing for the past couple of years. I mean, this trading range here, really no options trades whatsoever. Just not worth the risk. You can see the volatility here. We're just basically bouncing back and forth between 95 and 105. And really, I wouldn't. I mean, I suppose you could argue on a monthly basis, we still have, we're making higher lows here, and we've made higher highs. So on balance, this seems to have a general upward bias, but very, very choppy action, and certainly nothing that we would be interested in the options arena. So we had a short working on crude that was stopped. We had a short working on heating oil, and it would make sense. We're heading out of the winter. We might get a little double bottom breakout here, basically M's and W's, right? So buying looks like this, selling looks like this. So we had this big M top here. There's the fail there. We threatening to put in a double bottom here. So I suppose a move above these levels, 302.16, would trigger buy signals and at the very least cover your shorts. So let's see what we have here. Heating oil, 302.16 stop right now. So what that is, 302.16, yeah. Unleaded, it's summer driving season, so unleaded should be moving higher. So there's double bottoming action. We're making higher highs and higher lows. Sure is running into a lot of traffic here. And considering the seasonality nature of this, we actually historically we want to sell our unleaded gasoline in the middle of May. So not looking for a heck of a lot more upside action. Obviously, if this low here gets broken, then that will imply that this higher highs and higher lows pattern is over. So I think that's probably where we have the stop right now. So 293.13. Let's see what we got here. Stop still sitting 282.52. So that would be, oh yeah, that's right, 282.52. Look at that. So I just corrected myself. So that is this low bar right here, 282.52. That's this low right here. So if that gets broken, then probably this uptrend is over. Natural gas sure has been interesting of late. Big spike higher, then a consolidation. We broke this low here, so it stopped the pattern of higher highs and higher lows. So that was 456.3. So you can see on the unleaded gasoline, there's our stop there, 456.3. That long was from 385. So and that's a huge gain. Like 70 cents in natural gas, that's a lot of money. So that was a huge, huge gainer. That trend was started last October, that long ago, basically 6 months, and now that's finally wound down. And interestingly enough, usually these bull markets, for 6 months in duration, they usually end with like massive spikes higher. That's exactly what happened here. I mean, gee whiz, this contract was over $6 at one point. I mean, the actual paper profits on that 385 long are just huge. But the key there, of course, we had a target of 411.19. Anytime we put on a trade, we always want to have a target ahead of time. So that target was hit, so we could justify the trade. Worked pretty well. Moving right along, the softs. Coffee sure has been an interesting character, eh? Look at weekly commodity trend survey. Check this out. The trend's been up for 16 weeks, long from 122.75, with your stop now at 166. So you're up 45 cents in coffee. That's a lot of money. That's $3.75 a point, so that's over $12,000 a contract. And if you look at the chart, it's just beautiful. Here's that 125 mark right there. So basically the market, this double bottom breakout got you in right at the bottom, and the market just exploded higher. And you can see this is the 166 level here. We have been over $2. And as long as the market just keeps making higher highs and higher lows, I'm more than happy to stay with this trade. So fantastic job by the weekly commodity trend survey to pick that bottom, and a huge, huge profitable trade there. And I suppose at that point we probably could have looked at options. I wasn't looking at the options in particular back in the beginning of the year, but I bet there were some juicy, juicy options there. All right, let's see what else we have here. Orange juice been trending higher 11 weeks. Cocoa 3 weeks. It's been moving down. It's interesting because a few people asked me recently whether they should be buying cocoa, and I said, "Wow, look at that nasty double top there. Straight up, down, up, failed, back down." So that's a wicked sell signal from that level right there, which just so happens to correspond with what is it? It's 29.05, and the target is 25.42, which would just be a nice simple 50% retracement right back into this area here. I didn't really look too closely at the option prices. I might actually take a boo at them. In fact, why not? Let's go take a look at them now, see what they look like. There might be a trade here. What do we want? We don't want that. We want daily. Maybe like the December. And intraday quote. Puts. Okay, so our target here is about 25. So if we could get a 26 put for less than 50 cents, that might actually make some sense. That's what we got here. It's 26 put. Oh, look at that. Interesting. So the 26 put right now is 36 cents. So if we could get this put at what this price is, the 25.5, then that might actually be an options trade. So I'm going to keep a close eye on this. And for those out there who are watching, there's your first little tidbit of the week. Nice. So nice double top. 25 puts, right? What did we say? 26 puts. That's this put right here. At the 50% level, the 26 put will be worth 57.5 points. So we could justify paying 27, 28 points. And right now they're 36. So something to keep an eye on. We'll be watching him closely over the coming weeks. We may have a new trade here. But not just yet. Close, but not yet. All right, moving right along. Sugars heading down now. Stop was hit. Really messy, that sugar chart. Cotton was a recent highlight for me. I was really interested in this. Kind of the same thing as we're seeing in cocoa, though. A little bit dangerous now. But I did a write-up on the cotton options for December. I thought they looked very interesting. So at this date right here, you can see that the December $95 calls were 105 points. Let's go see. They're probably underwater now, which is good because if you missed the trade before, you could always consider it now. Let's see where they are. December calls. 95 points. Ooh, 77 cents. So nice and cheap. Wow, really cheap. So those are definitely something to keep an eye on now going forward. So these calls, just when the market was up here, these silly calls were $1.35. And the market hadn't even gotten back to our strike price. Now they're 77 cents. So they've literally fallen 50% in just that past week. So number one, it tells you the volatile nature of commodity options, extremely volatile. But number two, if you're just, nice and patient, just pick your price, pay it. And the reason why you bought it was because of the intrinsic math we're expecting by expiry. So this should be a really interesting scenario to see what happens over the next 6 months. Because basically we have a December option here. So that trade's on. Now it's less than what we paid for it. So all of those that missed the trade, there is an opportunity to pick up a cheap call there. All right, the grains. Grains are heading into their summer season, so we should see a bit of a bid here. Again, though, these are looking awfully soft here. Look at the momentum's kind of rolling over. Not really much of a seasonal rally there. In the soy complex, you have three components. You have the soybeans themselves, you have the soy meal, and you have the soy oil. So this is the soy meal. This is what is fed to a lot of livestock. Same sort of thing. Heading into the summer growing season, we should see a bid. You can see this wide double bottom here. Do we have this trending higher? Soy meal, we have it up. We're long from 468.60, stop 413.80. And it looks like the target was hit with a little bit of an HTML error too. Isn't that interesting? Didn't even notice that before. So soy meal still working higher. No stop hit yet. The bean oil, not so bullish. V bottom. V bottoms love to be tested. You can see we have a bit of a battle here. Whichever way this breaks, if we break below this low here, 39.85, then I'm going to be looking, that'll be an M top, or basically one of these tops. And if that's the case, probably won't set up an options trade because it'd be tough to come up with downside targets that are realistic. But nonetheless, that will show me that this market is trending lower. That's not the case right at the moment, but definite possibility. Right now, it's showing that the trend was down and that stop was hit. So basically, they're sitting on the sidelines. And actually, it's interesting because if we get the break below there, then that will be a resumption of the trend. And we'll have to do a new one for this report. The wheat, obviously, problems in Ukraine and Russia, big wheat producers, so probably why we got a bit of a bid there. You can see a potential inverted head and shoulders here, but again, same sort of thing as the bean oil. We did make a new high here this past week, so that in itself was bullish. Interesting how we gapped lower and we've come right back down into support. So at the moment, I would say at best we're sort of sitting on the sidelines, just waiting. And of course, there is no options trade because profit margins just aren't there. Looking at the corn, same sort of thing as the a lot of the grains. Actually, corn looks a bit weak here. Might actually get a nice double top breakdown. I would have thought that the corn would have tried to rally and fill in this monstrous gap here, but I guess the growing conditions out of the States are pretty good. We must have had a pretty friendly FDA report. What do we got here? Not really talking about anything in particular on those reports, but nonetheless, looks like she's heading down now, so we may have to revise this. What do we have here? Oh, down for 43 weeks. The stop was hit. So here's a great example. 43 weeks in a trade from 6.25, and you were stopped at 4.30. That's almost $2, or basically about $10,000 a contract. That's some serious money. And lastly, in the grains, I like to follow oats. Woo, huge fail here, right here. So we broke down. This is a nice bearish ABCD pattern. I like to consider oats as a nice leading indicator. So if oats are breaking down, then that to me tells me that the grain market is especially weak. So if grain prices are weak, then that means that our meat prices should be strong. Let's go see what's going on in the meat market. Well, as you can see, and we've all seen probably at the cash checkout counter, but meat prices have been moving steadily higher quite a while now. We do have a short-term bearish ABCD pattern working here. It looks like prices want to come back down into these old breakout highs. So not seeing the bullish enthusiasm there that we should see according to the grain price weakness. Maybe just a short-term aberration there because prices went parabolic there. I do notice though that the feeder cattle is just on fire. Look at that. Feeder cattle made a new all-time high again last week, so just powering higher. So if anything, based on the feeder cattle, and keep in mind, feeder cattle are the cattle that have been slaughtered. Live cattle are the cattle that are sitting waiting to be slaughtered. So slaughtered cows prices are moving up. Live cows prices are kind of sideways. If we get any sort of supply squeeze on the live cattle market, this thing will have to play catch up real quickly with the deferred future. So we'll see what happens there. And last but not least, good old pigs. The live hog markets try to play catch up with the meat, the cows. Higher highs and higher lows, very powerful trending market here. And as we said, we've been trending higher now for 10 weeks. This guy's logged from 102.56 with their stop now at 112.20. So that would be basically a break of these lows, 112.20. So that's 10 points on live hogs at $4 a point. That's $4,000 a contract. So pretty respectable moves. Okay, so that brings us to the end of the weekly commodity trend survey review. Gotta blow my nose again. Be right back. All right, so from the options perspective, the only positions that I really like at the moment are long Japanese yen calls. That chart looks very interesting there. And long cotton calls. And that's this chart here. This long cotton trade looks like it could take a little bit of heat. We might have to come back down and test these lows. So we'll see how that goes. If we look at the longer term chart here, this is the reason why I like the cotton market so much. Over the past 4 or 5 weeks, as we slowly moved higher here, this part of the chart's been cut out of the frame. So when you look at the weekly chart, you don't see that, but you can see this very wide double bottom. And basically, the breakout through the highs here was a nice long-term buy signal for me. So that's why I like that December cotton trade. All right, so that basically summarizes the weekly commodity trend survey. And like I said, I am rather under the weather right at the moment, so I'm not really too jazzed about doing too long of a presentation. But I did want to get something out there so that people at least felt like there was something today. So there were a few people on the YouTube channel. I see there's a couple people now. I am here in the lounge by myself, so obviously I can't ask people in the lounge if they have any questions. So anybody who's in the YouTube, Jerry, nice to see you again, Jerry. And anybody else is there with him. If you do have a question, feel free to ask. If you'd like to pop into the Google Hangout room, you're more than welcome. I will basically reiterate, and I've said this a while now. Seasonally, this is a very tough time of year for the markets, participation-wise. The weather's getting better. People really aren't that interested in stock market stuff right now. They're more interested in getting on with sort of living outdoors and remembering what the good weather was like. So I don't really imagine we're going to get a lot of interest in these shows through the summer, but that's okay. No big deal. Uh, and the purpose of these shows is really just sort of keep a running track record of trades. So as I said right now, I've only got 2 trades on right now. One of them's underwater. One of them's basically scratch. And that's basically it for this week's presentation. So I'll give you a couple minutes to ask a question if you got one in the YouTube lounge. If not, then we'll call it a day. And the show is about an hour long. So actually, that took about an hour to go through all that. It's a bit of a surprise. I suppose just for posterity purposes, I'll do my plug. If you enjoyed this show, if you learn anything from this show, if you get any ideas, feel free to pop on over to the website, therationalinvestor.ca. You're more than welcome to give a donation in Bitcoins. As you can see, this has actually worked pretty well. We have 37 donators, and then you can see the size, 0.3, 0.03, 0.02, 0.01, 0.01. 0.01, et cetera, et cetera. So thank you very much for your generosity. Obviously, that message has reverberated. As well, you're more than welcome to follow me on Twitter at CR Investor. That way you get a list of, show schedules, option trades that I'm looking at, chart analysis that I do on a regular basis. So it's a really cool feed for that. In fact, watching, I just did a comment just a little less than a day ago about these Japanese yen call options. I still think they look very, very attractive. So, all right. So I don't see any questions on the YouTube page, and like I said, I am by myself here in the lounge. So on that note, I guess we'll call it a day. You all have an awesome afternoon, awesome late May Memorial Day weekend and all that. And on that note, I guess we will take ourselves out of here. Bye, everyone. Have a great trading week. We'll talk to you again.